where it's important to really hone in on your apportionment percentage because going over this threshold by even $1 means that you'd pay tax on all those gross receipts. For those taxpayers that are subject to the commercial rents tax, again, this tax applies to those who either earn lease or sublease income from commercial space inside San Francisco. There are exclusions for how that commercial space is used. So if that commercial space is being used for either industrial use, arts activities, or retail sales, then there may be an exclusion that applies. So it's important to, before filing and paying your commercial rents tax, it's important to know how the lessee is using that space and whether it's relevant to any of these three excluded activities. These activities have specific definitions in the code, so I won't get into those now. But just know that there are certain exclusions for the commercial rents tax based on how the space is used by the lessee. And then lastly, a lot of times taxpayers will get estimates mailed to them. And these estimates are based on the prior year tax liability. But as long as 25% of either the prior year tax or the current year tax is paid in, there won't be an underpayment penalty. So the strategy here is that if you think you would have a higher amount of San Francisco gross receipts report on last year's return as opposed to what's going on this year, or if you've experienced a change in where your headcount is located. So if you think your San Francisco payroll factor will be significantly less as opposed to the prior year, then you may want to consider paying the 2021 estimates on a current year basis instead of just defaulting to what San Francisco has sent you in the mail. So that's another thing that I can assist with, is doing a current year San Francisco tax projection. And then for companies that were subject to the payroll expense tax last year, pass-through entities who compensated owners, there's often confusion on how much and how you would determine owner compensation. Obviously, if you're looking at compensation paid to employees, a lot of times you'd be looking at W-2 wages, but what would you include as compensation for owners who are performing services in San Francisco? And in recognizing the confusion on whether you take not only guaranteed payments, but also, the owner's share of business income, San Francisco has a safe harbor method for calculating owner compensation, which may result in less compensation being calculated than combining guaranteed payments and their portion of ordinary income. And this safe harbor method mentions that a taxpayer, instead of trying to calculate directly what that owner was compensated, can use a safe harbor method, which takes into consideration the amounts of wages reported on the W-2 for the top 25% of employees who are paid in the city. So you'd look at the employees that are based in the city and those employees who are in the top quartile of pay. You take that median pay and multiply it by 200%, and San Francisco would deem that as an appropriate method of determining owner compensation. So doing it under this method may result in less owner comp being calculated as opposed to doing it directly. So if the direct method was used on last year's return when the payroll expense tax was still relevant, you may want to determine whether this safe harbor method results in a lower tax liability and how it would impact your gross receipts tax as well, if that's determined based on your San Francisco payroll factor. And then if you are a company that, after looking at the registration requirements, thinks that they had a previous registration requirement but haven't been filing and paying San Francisco taxes, San Francisco has sort of an unofficial BDA program that they don't advertise on their website, but you can usually come forward starting on an anonymous basis, and they will generally reduce the look back period to 3 years as opposed to an indefinite look back period if you haven't filed. And they'll usually abate late payment penalties, but not interest. And I've helped companies go through this program. So if you're aware of a company that may have had a San Francisco registration and tax return requirement and want to avoid having a significant amount of late penalties, this may be an option for you to go down. And this last slide just shows some important dates that companies should be aware of for the fiscal year 2020-2021 period. Most companies filed their 2020 business tax return, which was due April 30th this year. The quarterly estimate deadlines are below, as well as the 2021-2022 registration renewal fee. So the Q1 payment for 2021 was due April 30th as well. The registration renewal was extended until November 1st, and then the Q2 and Q3 payments are due later this year, the Q2 being due on July 31st, and the Q3 payment being due on October 31st. So something to keep in mind, this is my email in case you want to connect. If you want to copy the slides, or if you want to talk about your prior year San Francisco tax return and want me to just take a quick look to determine whether the liability was overstated, I'm happy to do so. My email is brian@bdconsultantsllc.com. I'm happy to connect, and I appreciate everyone joining this presentation, and I look forward to staying connected. Thanks a lot, guys. Have a great week.